Hey guys, John Paulomy here, Actionable Intelligence. Today's Saturday, June 9th, 2018, and I wanted to give a short update on some recent news that's pertinent to the ongoing uranium bull market that we're in. I have a subtitle here, Katusa calls the bottom with a question mark, and we'll get to that later in the presentation. So we had some pretty recent news lately, bullish developments in the market, and one of the main ones was the announcement by this investment fund or special purpose vehicle called Yellow Cake, and it is a creation of some finance people to raise a significant amount of capital in order to buy physical uranium yellow cake. As you can see, I pulled some bullet points out of the article that I read, and I'll put a link to the article so you can take a look at it at your leisure. But basically, it's a investment group that's creating a vehicle in order to buy physical uranium. And the deal is they're going to try to raise 150 to 200 million dollars to buy around 8 million pounds of uranium. They also have a deal with Kazatomprom to buy $170 million worth of uranium and an option to purchase $100 million in uranium each year for the next 10 years. So I look at this as being very bullish because what I'm seeing here is people that are normal finance people or investment people that are now recognizing the value and the setup that we have seen in uranium for the last couple years. And what was interesting is I put a quote here of what one of the principals of this Yellow Cake fund said. It was basically, uranium is fundamentally and structurally mispriced. I think that's a very succinct way and accurate way to sum up the current uranium market. Now, just as a review, we understand that Kazatomprom is looking to have an initial public offering of the company sometime later this year, and it certainly behooves them and their management to get the price of the underlying commodity that Kazatomprom produces, which is uranium, as high as they can, and at least change the perception of uranium prior to the IPO. Certainly wouldn't behoove them to IPO into a market where the perception of uranium was negative and the price was stagnant or moving sideways. So I think this is, now we're starting to see what I was waiting for in this uranium market, which is what we saw in the last uranium market, bull market in the last decade, which was the entrance of non-uranium professional people and investment funds into the market. And we need to remember that this uranium market is pretty tight, and you start trying to stuff 150, 200 million dollars into this market and start trying to buy up physical uranium, I think there's going to be a perception change. And going on later on into the presentation, we'll talk about the fact that we've also heard other rumors that or indications that other investment funds are forming for the exact purpose to do the same thing that Yellow Cake is, which is buy physical uranium because of its undervalued nature. And this is exactly what happened during the last bull market, guys. And this is, the rocket ship is leaving the pad, the train's leaving the station, whatever metaphor you want to use. That's what's happening. Now, I don't want to over promote this, but this is definitely a positive development. So, going on to the next slide. One thing I want to say right now, and I don't want to blow his head up too much, but there is a guy on Twitter. He goes by the moniker John Quakes, and he's basically the headline news of uranium. This guy does yeoman's work. You need to, if you're in the uranium market, if you are a speculator or an investor that's following uranium, you need to get on Twitter. You don't have to post, but you need to follow John Quakes. And this guy will gather and amalgamate and aggregate every single tidbit of uranium market news out there. And he had a tweet this week where he showed the several charts of different stocks and how they performed during the last bull market in uranium. And shout out to John. I just wanted to throw a couple of the charts up that he had, because I want to point out two things that I think most people will catch the first thing, but most people won't catch the second thing or think about the second point. But let me get to the first point. Here's a chart of Cameco. Obviously, this is the 800-pound gorilla. You can see the movement from mid 2004 to the peak in late 2008. You see the move went from, down around $7 all the way up to $47, something like that. So that's a pretty good move. And you're thinking, people are thinking to themselves, well, that's, five times, 6.5 times your money. Yep, that's right. That's what I'm talking about. That's the 800-pound gorilla, the biggest company, moves 6 times. So I think the thing that people need to be aware of is, yes, we've talked about it in the past. You can create a tremendous amount of wealth in these markets. I've used the term rip your face off returns. And this is the 800-pound gorilla. I'm going to show some other charts of some smaller companies that had even greater returns. But one thing I want you to note, everything that goes up eventually peaks and goes down. Look at the right side of the chart, guys, from when the stock peaked. So you need to be aware that this isn't going to be a one-way street. At some point, these stocks are going to peak out. The euphoria is going to be unbelievable. The positivity, the market momentum, so many people talking positive. There won't be any negative, and that will be the time to sell. Remember, we're in this to make money, so at some point we have to sell. So that's one thing I want to point out on these charts, is that eventually these things will get to a point of maximum optimism. There will be a top. Enough capital will eventually come into the market to correct the supply-demand imbalance. It will take several years, but eventually these stocks will move and they will peak. So you have to understand that, and you have to understand why we're in these things, and that's to make money, not ride them out. I mean, I made the mistake last time. I didn't get out in time in a lot of these stocks. I mean, I didn't ride them to the bottom, but I cut myself off at the ankles with self-inflicted gunshot wounds by not paying attention about how to get out of these things and make money. Now, you're not going to catch the exact bottom, and you're not going to catch the exact top, but you certainly don't want to ride it down and end up in October of 2008, where the stock was at 37, and within a month it was at 12, like it shows on the right side of that chart. So I just wanted to point that out. I'm going to show a couple other companies here. Here's Denison Mines, less than $1 to $16. That's 16 times your money. I think that if you concentrate money into these markets, and I'm not saying we're going to get some similar returns, these are a lot more shares outstanding, and the market dynamics are a little bit different, but there are going to be some stocks in this bull market that move like this, that go up even more than 16 times. Same thing though, you had to get out at the top, or you had to get out reasonably to the top in order to capture the majority of the gain and not experience this. And believe me, there are people that wrote it all the way up and wrote it all the way down. Do not be that person. And here's really one of my favorites here. Here's Energy Fuels. I mean, here's a stock that went to $250, $60 a share, and now it dropped back down to 10 or 20 bucks a share. So this is what can happen. It's a rocket ship ride, guys. I mean, that's straight up there. That's, if you want to see a rocket ship and you want to, and I own some shares of this company, and this, it was unbelievable. It was just up every day. Every week, the reports would come out about the uranium price. And spot price was jumping $1, $2, $3, whatever every week. It was just unbelievable. And you cannot. What I'm trying to warn you is, just to reiterate one more time, you got to be cognizant, because it's very easy to get caught up in that euphoria and think this is just never going to end. And then the visions of sugar plums and villas in Italy and laying on the beach in Tahiti for the rest of your life, it will creep into your mind. And that's why I talk a lot about managing risk, understanding when to sell, because I'm telling you guys, when it happens, it's easy to get caught up in it. So shout out to John. These were good charts. Like I said, you need to follow him on Twitter. If you're in this uranium market and you're speculating in it, you really need to follow this guy on Twitter. There's a lot of other guys that you'll start running into that are also pretty good on Twitter. But John, I mean, he's the main aggregator of all the information. So if you're in the uranium market, follow John Quakes on Twitter. Okay, last but not least, our friend Marin Katusa, Mr. Resource Stock, published a big article this week where he says that he's calling the bottom. We're at the inflection point in the uranium market, basically based on this recent announcement by Yellow Cake. Look, Marin Katusa is who he is. He's a stock promoter. He's made a tremendous amount of money. He's in that whole Rick Rule, Doug Casey, Frank Guistra, all the Vancouver, Toronto, daisy chain of newsletter writers and financiers. I'm not going to begrudge him. He is he's a promoter. He's a self-promoter and a stock promoter, but that doesn't make him wrong. And if you read the article, I'll put a link to it. He makes some good points, and I agree with him. Now, I mean, he's making it out like he's the only one that called the bottom. I mean, this guy was nowhere to be found 2 or 3 months ago, but suffice to say, he puts out some good information. So the one thing I will give him is this guy is plugged in. He has a seat at the table. He gets to hear all the deals. So if he says that, money is starting to move into this and it's non-typical money or outside the resource sector money, then I believe him, because he is plugged in, he has a seat at the table, and he gets to see all the deals and hear what's going on. The other thing is what I think is positive is that he does have a large following. People do listen to him, and this is part of the perception change that we're going to see as this market transitions from stagnant. I mean, we're out of the bear market obviously a while ago, but we were in the side-to-side stagnant market, and now we're moving into the bull phase. We're going to start seeing things move higher. And people like him are influencers, and they will have some impact on changing the perception to positive from negative. Or as I like to say, we're going from terrible to less bad. That's can mean a tremendous amount of money, just a slight perception change. So if it's true what he says, that finance and Silicon Valley money are truly moving into the market, then the uranium price is going to move. I mean, it's just that simple. You can't stuff hundreds of millions of dollars into this spot market or start buying these without it start influencing things. And that's going to be a 2x4 upside the head of the utility buyers. And I think it's going to be like a fire building a campfire. You start out with some twigs, you get the newspaper, you get your small flames going, you start adding some more tinder, get this thing going, get some hot coals going, and then you start throwing on the big logs. So I think that's where we're heading. And I don't know if I think Doug Casey said it once, trying to put this kind of money into the uranium market would be like trying to put the contents of the water behind Hoover Dam through a garden hose. It's going to be a tremendous amount of pressure, and that's why you get these big moves higher. And it will be self-reinforcing, and like a snowball rolling downhill, it'll just get bigger and bigger. As the price moves higher, it'll draw more capital in. This is just typical of how these booms work. So bottom line is that as the weeks go by, months go by, the positive catalysts in the uranium market continue to pile up. If you haven't been paying attention to it, I suggest you review what's been going on. Paladin shutting down, Langer Heinrich, these investment funds moving in. It'll be interesting to see what Cameco does with MacArthur River here after the summer's up into the fall, and the Kazatomprom IPO, and how the Kazakhs try to push the uranium price higher in anticipation of that. So lots of things to watch. I have been nibbling away at quite a few stocks. I've really looked at a lot of the Australian companies. I think they get ignored sometimes. I've got some of those in the Actionable Intelligence Alert newsletter, paid subscription. Those have really started to move. And I encourage you to do your homework, because it's time to start, if you haven't got your position on, to get your position on, because when the big money moves into these things, you're going to be running to catch up. So that's the update for this week. Short video, guys. I'm actually traveling, so my videos will be a little bit sparse. I'm going to get on here as best I can and update things. I'm working on a few other video topics, but I appreciate all the support. Please hit that subscribe button and share the videos with your friends. Feel free to comment or criticize me in the comments. I read all the comments, I read all the emails, and I try to respond to everyone. And I just thank you guys for the support. The channel continues to grow slowly but surely, and I appreciate the great comments and the feedback. So we'll talk to you soon, and thanks for listening.